Hello and welcome to the next chapter of the EHE Fast Growth podcast series, now in vodcast form. I'm Simon Landy, the CMO at EHE, and I'm going to be your host on this series. And before I introduce today's guests, I just wanted to tell you a little bit more about EHE, where entrepreneurs help entrepreneurs. At EHE, we don't just talk about building tech businesses, we actually do build tech businesses. We build them, we invest in them, and we advise and support them every step of the way. This series is your backstage pass to our venture studio, where bold ideas meet the funding, strategy, and expertise they need to scale fast. In every episode, we'll share how we identify opportunities, how we're going to support founders, and create ventures that are designed to grow and succeed. Whether you're an investor looking for exciting AI deal flow, an entrepreneur looking to grow your idea, a partner firm supporting the startup and early stage ecosystem, or you're just curious about what drives fast growth businesses, you're in the right place. No fluff, no buzzwords, well, not many buzzwords, just clear, actionable insights from the people making it happen. Welcome to the EHE Fast Growth Podcast, the Venture Studio Way. Hi, hello, and welcome to another episode of Fast Growth, the Venture Studio Way. Today, we're breaking down the Enterprise Investment Scheme, or EIS, and its little sister, SEIS, which stands for Seed Enterprise Investment Scheme. If you're an investor looking for tax breaks or a founder raising capital, you need to know about these schemes, and it's surprising how few do. They've been created by the UK government to encourage investment in early stage high risk businesses, and in return, investors get significant tax reliefs, making it a win for both sides. So, how do they work? What are the key benefits? What are the numbers that you need to know? And how can startups and investors make the most of them? Well, what better person to answer these questions than Christina Lockhart, the Director General of EISA, the Enterprise Investment Scheme Association, the UK trade body for the EIS scheme. Welcome, Christina, and thanks for being here.
Thank you so much, Simon, and great to be joining you.
Excellent. And Christina is joined by Jack Worne, the Investor Relations Lead at EHE, and himself a former tax accountant. So we're definitely in good hands here. Cool. Right, so let's start with you, Christina. I know ESA have been doing a lot of work to support SMEs and startups raise capital through the EIS scheme and the seed scheme. But for those listening who may not be familiar, can you give us a quick overview of what EISA does?
Yes, absolutely. Thank you, Simon. So EISA is the Enterprise Investment Scheme Association. So we are the trade body for the SEIS and EIS ecosystem. What that means is we've got just over 500 members, and we represent people from across the ecosystem. So we represent founders, we represent advisors and intermediaries, so the lawyers and accountants working with founders, and then also, of course, the investors, the fund managers, the financial advisors. So really representing people from across the whole EIS ecosystem. And we do the typical things that trade bodies do. I usually break that down into three main areas. First of all, as you mentioned in your introduction, a lot of people haven't heard of these schemes yet, both on the founder and investor side. And education is such a big part of what we do. So we run free events across the whole of the UK for founders and potential investors so that they can find out more about these schemes. We have a number of free guides online. We run a number of online webinars about this as well. So really trying to spread the word and get the education out there. And the second thing we do is kind of services for our members. So we'll have regulatory updates, technical updates, changes impacting the schemes, but also networking opportunities for our members. And I know you joined us at one of them on Wednesday evening, which was great.
I did, yeah.
Founders and investor networking event. So that's the second thing we do. And then the third thing, which is really key, is representing the industry to government. So liaising with HMRC and the Treasury, making sure the schemes are working effectively. But also, we mentioned earlier that a lot of people haven't heard of the schemes, and that includes MPs as well. So we're really trying to raise awareness across government and Parliament of the power of the EIS and SEIS and how important they are to the UK economy.
Brilliant. Thank you. It's a fantastic intro. And yes, I did come to that event. First one that the EHE have attended the other evening, and it was fantastic. Really good cohort of people in the room. So thanks very much for the invite. And obviously off the back of that, we've now joined the EIS Association as well, haven't we? So
and delighted to have you as members. So welcome.
Brilliant. No, thank you very much. And I think that government bit is very important, isn't it? I think obviously we had an enormous budget last autumn, and there was a lot of conversation around that. But what goes unnoticed is the work you and your team do behind the scenes to really promote the benefit of what EIS is doing, which is great.
Thank you. Yeah, absolutely. And obviously, up until towards the end of last year, there was a sunset clause on the enterprise investment scheme, which meant that it was due to finish in April 2025. And the government confirmed a 10-year extension in September, which is so important. So now we know that EIS is going to continue to 2035. And the Chancellor specifically mentioned the importance of that extension in her budget as well. So it's really great to have the support for these schemes and also the recognition of what they do for entrepreneurs and innovation across the UK.
Absolutely. So, as you've said, SEIS and EIS play a big role in early stage investing, but they can seem a bit complicated. So, back to you again, Christiana. It'd be good to know exactly what the schemes are. Obviously, we've discussed a bit about why they were introduced, but what are the schemes and why are they relevant to the startup ecosystem?
Yes, absolutely. Thank you. And they can be complicated. And so it is important to be aware from the beginning, because unfortunately, there are a number of cases where founders have accidentally disqualified themselves from the schemes, through no bad intention, but have set up a company in a certain way or done something which means they can't benefit from it. It's really important to find out as early as possible. There are also age limits on companies who can use the EIS and SEIS. So the SEIS is the first one. That's for the earliest, highest risk companies. You can only use the SEIS in your first 3 years. So that's really important to be aware of. It used to be 2 years, and actually the government extended it to 3 years in April 2023. That's been really important, particularly for companies outside of London and the Southeast, maybe where the founder doesn't have a background in finance and an established network with investors. That extra year makes a big difference. But it's important to be aware that's the first 3 years. And obviously, from the first conversation to actually getting the money in, that can be a significant period of time as well. That's not typically 4 weeks. It's typically, 4 to 6 months or more. So that's something really important to be aware of. For the EIS, the age limit is 7 years. And again, that can go by quickly. So really important for founders to be aware of that. And these are for high-risk companies, and there's something called the risk to capital condition. So there genuinely has to be money at risk. The investment must be at risk. So there are a number of excluded trades. These include things like asset-backed, things like property, where there's not a kind of genuine risk to the money that's being invested. But we do have a guide on our website with this sort of guiding checklist where you can go through and check your eligibility. There's also something called knowledge intensive. So if your company has a high number of staff members who have high level degrees, or there's a significant amount of IP, that's something you could look into as well. And that means you're eligible for slightly more generous limits in terms of the amount of money you can raise as well. So those are things to be aware of. But essentially, these are really to support a really wide range of businesses across the UK, high growth businesses that are looking to grow, that have ambitions to grow. And that's a really key part of it.
Brilliant. That's a brilliant summary. For me, I've learned a couple of things there as well. So this whole 3 year, 7 year, I wasn't aware of that. So that's really good to know. So I guess if you're an EIS, is it 7 years from inception of the business, not 7 years since SEIS?
Yeah, exactly.
So
7 years from the start. And, even at that event that we were both at 2 days ago, I was speaking to a founder who had missed, she no longer qualified for SEIS because she was older than 3 years, but she hadn't raised the full SEIS amount. So it is something to be aware of for sure.
Right. Okay. Well, we'll get into the difference between EIS and SEIS in a bit, because that's also important. So Jack, bringing you into the conversation. So in terms of the sorts of people that we've spoken to recently, what kinds of businesses actually qualify for SEIS and EIS? And I think Christiana's answered that slightly in terms of what can any business qualify? No, but what sectors do qualify?
Yeah, as Christiana said, it's businesses that have ambitions to grow. Typically innovative businesses in sectors of innovation. So those can be tech, science, renewables, creative, consumer. There's a whole broad spectrum of sectors that would qualify under SEIS and EIS. There are a few sectors that don't qualify, or if the trade is a significant amount of the business, for example, financial services, real estate, heavy operator businesses, whether that's industrial, utilities, hospitality services. If a significant part of that activity in the business is there, it probably wouldn't qualify, and it's not serving the intended audience, which is high growth innovation.
Right, cool. Thank you. So let's break it down. Because obviously this works for both, as we said at the beginning, it works for both investors and founders and the entrepreneur. So let's focus on investors for a bit and sort of talk about how SEIS and EIS benefits investors. Why should they be interested in schemes like these two?
Yeah, absolutely. And these are really important schemes. So there's actually been more than £32 billion invested into 56,000 businesses since they were created. So these are pretty big numbers for the startup ecosystem. And the kind of headline tax relief, or basically because these are high risk, the government have created a number of tax reliefs to incentivize investment in this area. The one that a lot of people have heard of is the income tax relief. So for EIS, that is 30% income tax relief. So you could claim up to 30% of your investment, but of your income tax bill, provided you paid that much in income tax that year. And then for SEIS, you can claim up to 50% income tax relief on your investment. For EIS, there's also, for both of them, there's no capital gains tax on your investment. So whatever your investment does, if it grows, you don't pay capital gains tax on that investment when the company exits. And then for EIS, you also have CGT referral relief. And this is something that, deferral relief, sorry. For EIS, you also have CGT deferral relief. And this is something that has attracted a lot of interest since the budget, in particular with the changes to CGT. For SEIS, it's a little bit different. You have CGT relief. So you have the potential exemption of up to 50% of an existing CGT bill. And then for both schemes, you have loss relief as well. So what that means is if a company fails, your downside is protected to a certain degree. So you can claim loss relief on the failure of the company. And then a little more complicated since the last budget, but you have a potential savings on inheritance tax up to the first million. And then it's potentially eligible for 50% relief on the income tax above that level. I hope that doesn't sound too complicated. Again, we have slides on our website, but essentially the summary of it is there are pretty significant incentives when it comes to the tax relief associated with both SEIS and EIS, which incentivizes the investment by reducing the amount that you might lose overall if the company failed, and obviously giving you a pretty significant potential upside, given that if the company does grow and is a success, and these are high-risk companies, so high risk, high potential, so there is a significant chance they'll fail, but also a chance that they might do very well, and any gain you get is free of capital gains tax.
Right, brilliant. And yeah, in terms of your website, I'll ask you at the end to give out those details, because I think it's going to be really important that people have got somewhere to go to actually find the sort of detail of this information. Because isn't there something also about you have to have the investment for a certain period of time in order to... Jack, have you got a view on that? I can't remember if there's any details.
I mean, there are a few disqualifying criteria. For example, if an investor under EIS were to then become an employee later down the line, that might be a disqualifying event for them. If the business has a change of control, also be a disqualifying event. But the upfront tax benefits and the downside reliefs are a huge appeal for investors to target SEIS and EIS businesses. On top of that, there's also some quite wealth preserving tax benefits later down the line with the capital gains tax, with the inheritance tax that are also, appealing to investors. And then on top of that, you've got the downside relief. If a business were to fail, there's additional relief there to minimise the effective capital at risk from the investor.
If I can just jump in as well. So, Jack, you mentioned some great points there about who could be eligible or not. It's worth saying as well that parents and children are not eligible. So you couldn't have a parent investing in your business and claiming these reliefs. And also for the SEIS and EIS, the investment must be held for a minimum of 3 years. So if the company is sold before then, you're no longer eligible for the relief. So it's important to note that because, this is patient capital. The idea is it's not a short-term investment. It is investing for the longer term. And these are investments that are illiquid. So even though it's a minimum of 3 years, what you typically find is that most EIS and SEIS investments, it's kind of between 5 and 10 years in reality until you get your money back if there's a successful exit.
And that's most likely. These businesses are very early stage. They're still either developing the product, taking it to market, getting significant enough growth for it to make an exit appealing anyway. So the majority of cases, the exit will typically take place after 3 years.
And so me as an investor, Tay, or I decide I want to invest in a business, how much can I invest? How little can I invest and how much can I invest under these schemes?
So this is a really interesting thing because I think often there's a perception that EIS and SEIS is only for ultra high net worth individuals investing, high 6 figures a year or something like that. And
well, that's not me. That's not me.
And whilst these are obviously, it's important to say these are high risk investments, and you must be aware of that. And we would always suggest getting professional advice around this. If we look at the HMRC data, which they publish every year, and it's always a year delayed, but the last year we have data for, more than 50% of people investing through the EIS invested £10,000 or less. And actually that shows quite a different profile to what the assumption might be. And one of the things about EIS and SEIS is it has helped to democratize access to these early stage investments, which can be very exciting investments, high risk, but could be very exciting, to a wider range of people who, yes, they have to be suitable for these investments. But actually, when you're talking about £10,000, that's a much more accessible level than, the high 6 figures. And I think that's something that's important to be aware of because actually many people don't know about these schemes. Many people aren't told about these schemes by their financial advisor. And I think it's something that we hear a lot of people say, oh, I wish I knew about these schemes sooner. I speak to many people who worked in the city for 10, 15 years earning very good salaries and very good bonuses and were never told about these schemes. Then maybe they started a business and found out about it from the entrepreneur side. But they say, I wish I'd known about this 10 years ago. I would have loved to have invested in some of these early stage companies. I would have loved to have supported some of these businesses. And, ultimately, these do tend to be innovative businesses that are having a significant potential impact on some of the greatest challenges we're facing. And so even though these tax reliefs exist, it's important to acknowledge that the underlying investment has to be a compelling investment. These are, companies that the funds or investors investing in really believe have the potential to grow. And then these tax reliefs exist to just incentivize that investment that would otherwise be very difficult to get.
No, I was just going to add, there's not enough awareness, wealth managers, tax advisors, etc. Those are the people in the know and can communicate more on these schemes. But I think the element of risk associated with some of the businesses makes it a bit harder for them to almost recommend going into these schemes or recommend startups registered under these venture capital schemes. So if there was a way that the government or the EIS Association could find a way to just make it easier for these third parties to create awareness of the schemes without feeling they've got a sense of responsibility around that recommendation, I think that would be really helpful.
We are caring very much on the education side, so not talking about specific individual circumstances, not giving financial advice, but just on the educational side, raising awareness that these schemes do exist. And it is important to say these are schemes that have been created by the government. The EIS was 30 years old last year. We celebrated the 30th anniversary, and they've been supported by every government for the last 30 years who have recognized how important these schemes are to the early stage ecosystem. We genuinely do have one of the best ecosystems in the world for startups in the UK, and that encourages a lot of startups to come here, a lot of founders to come here and build their businesses here. And the EIS and SEIS are a key part of why raising investment in the UK is a much more supportive environment than elsewhere. We actually had, the French government announced a very similar scheme to the EIS last year, where basically they came to the UK and looked at the SEIS and they wanted to create something similar in France. So not only are these world-leading schemes, but we've got other countries trying to copy them, and yet we're not shouting about them enough. And so that's what I'm trying to do, and what the association and a lot of our members are trying to do, just to raise awareness to ensure that people do know about them. And there are some really, surprising statistics, like the UK BAA, which is the Angels Association in the UK, did a survey of their female angels. So these are women who are investing in early stage businesses. And they found that 90% of them hadn't been told about the EIS and SEIS by their financial advisor. And it just shows, how much of a journey there is still to go in terms of raising awareness. And that's a big part of what we're trying to do through the events we're running, the online webinars we're running, really trying to get the message out there. So anyone listening, please go find out about this, and also please help spread the word, because these are important schemes. And I mentioned the numbers at the beginning about the 32 billion and 56,000 businesses. But we also did a report with Bohas last year as part of the 30th anniversary. And in 2023 alone, there were 380,000 jobs across the UK at EIS-backed businesses. 46.5% of UK unicorns over the last 10 years were EIS-backed. These schemes are really, really important to the UK. And it would be fantastic if we could get more people supporting these early stage startups that, are finding new ways to address the climate crisis, finding new ways to diagnose and treat cancer, creating companies that most people are using in their everyday life without having any idea that EIS and SEIS played a fundamental role in the start of their journey. So that's what we're trying to do. And another thing that I often talk about that I think surprises people is the number of household names that have had EIS investment or SEIS investment at the beginning who say the company wouldn't exist today without it. And there are just so many names that I'm sure many of the listeners would recognize, like Zoopla, like Deliveroo, like Just Eat, like my kids are a big fan of Pip and Nut peanut butter. There are just so many different companies that have had EIS investment at the start of their journey. Child's Farm is another one. Our chair, Joanna Jensen, is the founder of Child's Farm, and I've used that with my kids for years as well. So lots of big names that people will recognize, I think.
It's a real unsung successful scheme, isn't it? That's what's coming out loud and clear, that it's there for everyone to take advantage of, and please go out and do it. I mean, 90% of female angels weren't aware of it at the time. That's...
Well, they were aware of it, but hadn't been told about it by their financial advisor.
Right. Okay. Fine. So that's why. Is that why financial advisors, IFAs, wealth managers are one of your sort of key targets? Because I know we've talked about that the other day as well.
Yeah. So we try and work a lot with financial advisors and wealth managers. There are a significant number who use the EIS and SEIS with their clients, but I think there's definitely still an opportunity for more education in this space. And there was another interesting statistic that came out a few weeks ago where IFA magazine did a survey of their financial advisor community in partnership with Blackfinch, I think. And they found that 56% of those surveyed said, of wealth managers and financial advisors, said they had clients who they were now considering EIS for, who they hadn't been considering EIS for before the budget. So it is interesting as well that potentially there's this increase in interest since the budget as people are becoming more aware of tax efficient investing as well.
Yeah, definitely. After the tax rates increasing for capital gains, they're increasing every year for the next few years. I also want to mention, just going back to an earlier point about people making smaller SEIS and EIS investments. She said the average was around £10,000. We've seen different vehicles being used like Crowdcube, other SPVs, just to make it more accessible for people with smaller amounts. Sometimes the admin involved can almost deter founders, but also funds from, taking on smaller amounts of capital just because of the admin involved. So it's good that these platforms are almost unlocking a broader, I'd say, retailing audience for SEIS and EIS investments.
Yes, and of course, when it comes to investing through the schemes, you can start with as little as sort of £50 through a crowdfunding platform. But as you say, there are also a number of SEIS funds that I think have in partnership with the crowdfunding platforms, offered investment into their funds for as little as, I think the minimum's been £2,000. And obviously these SEIS funds are typically eligible for 50% income tax relief, which would mean the investment is actually costing you £1,000. So as we were saying, these are kind of open to a wider range of investors who could be investing smaller amounts, not the kind of six figures that maybe people assume is the case.
Brilliant. Well, I think that's a really good place to move on from investors to founders. So we've done a lot about investors there and the benefits to them, of which there are plenty. So probably one for you, Jack, moving on to founders. You work closely with startups on their growth strategy, for several years now. So what advice would you give to early stage businesses that are trying to make themselves more attractive to SEIS and EIS investments?
I'd say the first thing they need to make sure they're doing is getting advance assurance for SEIS and EIS, just to make sure that they can reach the broadest possible investor audience in the UK. It can be an easy red flag for any investor if they can't get the qualifying tax benefits under those schemes. So making sure you've got those locked down is really important. Also, once you've got that advanced assurance, it's not necessarily a business milestone or achievement. It's just an enabler to reach a broader investor audience. It's not something that you would leverage in your pitch, for example, as a significant achievement for the business. So I just thought I'd make that point as well. In terms of SEIS, though, with that 250,000 threshold, that can also kind of incentivize investors to move much quicker. Once they breach that threshold, all of the SEIS eligibility is then gone, and the founder then has to move into the EIS bracket, which is less attractive from an income tax relief perspective. So if someone has got good traction when pitching, someone has started to onboard and secure investors, once that threshold gets near, it can really encourage investors to move more quicker to get in before that threshold's breached. So it can be used as a bit of a FOMO mechanism once you've got a bit of traction with the investors itself.
So what's the limit? So you told me the limit with SEIS, which is the 250,000. What's the limit you can raise with EIS?
So as a business, you can raise 5 million a year with aggregate up to 12 million in total. And from an investor perspective, it's $1 million per year. Sometimes it can be increased up to 2 million if certain criteria is met. But as a founder, £5 million for the year and 12 million aggregate.
Right, cool. Thank you. Good to get those numbers in. So, Christiana, in terms of startups, are there common mistakes? I'm sure there are common mistakes they make. You mentioned one before, which is they go beyond 3 years and don't realise that they've got to be within the first 3 years for SEIS. But what are the other sort of common mistakes they make when they're trying to secure investment?
Yeah, I'm afraid that there are common mistakes. And therefore, we would normally suggest trying to get some advice around this, because the challenge is the mistakes can be very expensive to you and your investors. And so it's often worth double checking these things. We do actually have on our website a members directory, which is list of advisors who advise in this area as well. But to give you an example, you cannot issue SEIS shares and EIS shares on the same day. So what we sometimes see happening is someone's doing a raise and maybe it's more than the £250,000 that qualifies for SEIS. Maybe they're raising £300,000. And in that case, you would have to issue the SEIS shares on one day and the EIS shares the following day. You cannot issue them on the same day. Otherwise, it would disqualify the SEIS shares and the whole investment would become EIS instead. And kind of linked to that, similarly, you cannot raise SEIS if you've raised EIS. So make sure you raise all your SEIS first and then move on to EIS. There are a number of, different mistakes people can make as well. And it's important to really be aware of the rules. And it's not just up until the investment. You also have to adhere to those rules for the 3 years following investment as well.
Right. Okay. And there are other advisors out there that specialize in this kind of support then?
Yes, absolutely. And as I said, they're listed on our website. And, Jack also mentioned the advanced assurance. I'd say that's very important. It's not a requirement from HMRC's perspective to get that first, but most investors and certainly funds will need you to get that first. And when you are submitting your forms to HMRC and things like that, it is just being a little bit aware of timelines, because these things can take a bit longer than one might hope. We meet regularly with HMRC, and I know they've been working really hard to improve those timings, and I think they have improved over the last few months. But just as an entrepreneur, be aware, don't leave it to the last minute. Make sure you leave a bit of extra time, because obviously as a founder, each month is key, and you need to get that money in, and you can't always wait an extra 2 months for something to come back. So do be aware of that as well.
It's also worth mentioning that there's organisations like Seed Legals that have kind of developed processes that make it as frictionless as possible to get your application filled out and submitted, and those can be quite cost efficient as well. But I'd definitely recommend looking at third parties that have kind of solved that journey, made it as frictionless as possible to support your application. It also guarantees a bit more of a success rate in case you don't cover enough content in your description or your business activity or describing the risk element to the business. That extra opinion can also be really valuable.
Yeah, absolutely. And one of the challenges is if you don't include enough information at the advanced assurance stage, then it could potentially cause issues at the EIS1 stage once the investment has been made. So it's just really important to make sure you do include all the information that HMRC are asking for.
Oh, hi there. Just jumping in for a quick break to tell you about our AI investment fund, designed to back the UK's most promising early stage AI startups. It's SEIS and EIS qualified, which means investors can benefit from significant tax relief while supporting high growth tech businesses. So if you're looking to invest in AI driven companies with the backing of a venture studio to help them scale faster and smarter, visit ehe.ai/investor-platform to learn more. All right, that's it for now. Let's get back to the conversation. Brilliant, thank you. And then Jack, we talked about with investors how there isn't enough awareness of these schemes, even amongst some sort of quite sophisticated ones. So what, in terms of the founders landscape, do you think there's enough awareness of these schemes? And if not, what can we do to improve it?
I'd say second, third, fourth time founders will definitely know about these schemes. They'll have been exposed to them previously. The first time founders that have got a business idea and they're just solely focused on kind of developing that idea and making it as good as possible, they're not really exposed to it until they start maybe looking for investors, looking at angels or funds, hiring an accountant. And even then, as Christiana mentioned, not all accountants and wealth advisors are actually mentioning these schemes to them, where they can be a bit more proactive, registering and getting insurance, etc. So there's definitely kind of a deficit in first-time founders not being made aware of these schemes soon enough, and then finding out a bit later down the journey where they're at a founder event, they're raising capital or pitching to investors, and it's a question that they'll directly ask to them. So I'd say that's one point in terms of the benefits as well to investors. I know I'm moving from founders to investors, but the rules, every budget can potentially impact the benefits associated with these schemes. So where someone might have a perception of what the benefits are 2 or 3 years ago, it might not be fully up to date if there's been a change in a tax year. So I think there could be better ways to communicate up to date rules on the tax benefits and the inheritance tax timeframes and the capital gains and the deferral reliefs. There's lots of components that obviously are all beneficial to investors, but they can change slightly over time, and it's finding a way for everyone to almost have that one source of the truth at any point in time would be really helpful.
Yeah, and I think the onus, I mean, I'll answer my own question a bit. I think the onus is on all of us, isn't it? Everyone in the ecosystem almost has a duty to let startups and early stage businesses, make them aware of this and point them in the right direction, because it's there to help them.
I'd be interested to see if we can educate an audience that are maybe hovering around the idea of setting up a business and just want to understand all of the benefits and all of the support infrastructures that are in the UK kind of startup ecosystem, to just give them that extra push to go on and do it.
Yeah, absolutely. And I think the intermediaries are really key here as well. And I think it's really important that they're very familiar with the schemes, because often they are, but not always. And if an accountant or a lawyer is more familiar with the schemes, they're more likely to tell their clients about them. The other thing is, I would say to founders, try and get out and network as much as possible. Even if you're not looking to raise yet, go and meet investors, because often investors want to hear from you early on, several years before you're maybe looking to raise with them, so that they can track your journey. But also you can learn a huge amount from your peers as well, and from other founders. And a lot of founders find out about these schemes from other founders who are going on the journey as well. So I definitely say that's important. I mentioned our Ready, Steady, Grow events that we run across the whole of the UK. And a year and a half ago, we had a founder who found the event on Google, came to our event, had never heard of the EIS Association or the EIS or SEIS before. It was really wonderful, because he came back to the event this year and he said, I loved that event. I immediately looked into it. I got my advanced insurance. I've done my first raise. My business is growing. And he genuinely had started his business, but had never heard of the schemes before. And now he's been able to raise his first investment. So it is so important to just look at the events that are going on around you. And even if you don't know anyone going, don't be scared. Just go. You'll meet people. You'll learn something. They can be really beneficial.
Yeah, no, definitely. I definitely echo that. We're going back to the event we did a couple of days ago. It was very obvious there that there was a lot of people there that just were there to get information about, what's going on in the ecosystem, what's going on with the EIS, what's going on with, the ways in which they can get support from investors. Yeah, thank you. Thank you both. So I think we can safely say that the EIS, the SEI schemes are here to stay, which is great news, obviously, as you said, for another 10 years. And they're going to do some great work in the sort of startup world. But is there anything either of you wanted to close on? Any sort of final remarks you wanted to make before we finish?
I think the main thing is just to really emphasize how much these schemes contribute to the UK economy in terms of the innovation, the job creation as well, the economic growth. These are really good for the UK as a whole. And we want more entrepreneurs. We want more people investing in entrepreneurs. And so really spreading the word, as we have been asking people to do, is really key. So please do spread the word. And, I just hope to continue to have the success through these schemes, and that help to bring more and more innovative companies through the ecosystem, and support founders doing the brilliant work that they're doing.
So Christiana, if people want to find out more about you and about EISA, what are the key bits of information that they need to have?
Yeah, absolutely. So you can look on our website, which is eisa.org.uk. That's EISA. We have free guides available there. We have access to information. We also have our members directory that you can filter. So you can actually filter that by investor and see a list of investors who invest through the EIS and SEIS. One thing I would say to founders actually is do your research on what the investor invests in, because there are so many founders who spend a lot of time sending their B2B SaaS business to a life sciences fund that only invests in university spinouts, or someone, they're looking to raise 250,000 and they're sending it to someone who only invests more than £1 million. So really do your research. That information can be hard to find if you don't know where to look, but we have that information on our website. And so look at similar companies to you as well and look at who's invested in them in the past and try and find the investors that have a good fit in terms of investing in the stage you're at, the sector you're at, what you're trying to achieve. And what I'd say as well is that it's not just about the money. The money is obviously really important, but investors can bring with them a huge amount of additional benefits, whether that's guidance, access to networks, helping you build your brand and connecting you to other people. So really make sure we do these kind of meet the investor panels. And often people will say, make sure you question the investor as well. These are long-term relationships. You're talking about going into business with this person for 5 to 10 years. So you've got to make sure you get on and, ask to speak to other investee companies of theirs and get feedback about them too. So it's really important that you look into this and make sure you take the time to approach the right investor for your business.
Brilliant. Thank you very much. And then Jack, from your point of view, in conclusion, particularly in terms of investment and the EHE fund, what have you got to... How do you want us to close out on that?
These the schemes are right at the forefront of AI innovation. It fits the innovation criteria, and there's thousands of AI-focused businesses that are eligible under these schemes. And it's great for someone like us. It gives us a great pipeline of opportunities to look at and support. And it's the schemes itself that have probably contributed to the UK being third in AI innovation behind China and the US. And the schemes are going to be really important to maintain that and make sure that we stay at the forefront with a huge amount of startups in that space. But my final point would be just to echo what Christiana said about the schemes are developing our future economy. They're creating future jobs, they're creating future growth, and they're really a large contributor to that future economy, and they need to stay there for future growth.
Well, thank you both very much. I think what's great is that EIS and SEIS are really important, and we've proved today that they are. It's important that we get a message out there, and that's what we're trying to do more of, and podcasts like this are set to do that. So I hope everyone's enjoyed that. I'd like to thank Christiana and Jack for their time, and you now know where to go to find out more. Thank you very much. Cheers.
Thank you so much, Simon. Thanks, Jack.
Bye. Thank you for listening to this episode of Fast Growth the Venture Studio Way. If you found this valuable, don't forget to like, subscribe, and share it with your network. It helps us reach more investors and founders who are serious about building high-growth tech ventures. You can find Fast Growth the Venture Studio Way on YouTube, Spotify, Apple Podcasts, or wherever you listen to your podcasts. Want to learn more about EHE Ventures Studio and about how we provide tech, funding and advisory to ambitious startups? Visit www.ehe.ai. Thank you once again, and we'll see you next time on Fast Growth, the Venture Studio Way.